and give monetary value and support to people to let them launch ideas. And you didn't need to have these gatekeepers like VCs, private equity firms, angel investors. People could do so permissionlessly. So that was a really cool learning from it. And another really interesting thing was there's basically two sides of society. They're the founders and the investors, and there's the customers and employees. And if you look at this big wealth and equity, the reason why there's this big wealth and equity is not because minimum wage is too low. It's not because people are greedy. It's because all the money gets accrued amongst the founders and the investors. If you're a customer, you're an employee, like most of society, you don't really get a piece of that upside. So I was like, wow, wouldn't it be cool if everyone in the world could be a stakeholder, be an owner in things. You meet so many interesting people on a day-to-day basis. You participate in lots of, you go to a restaurant, you go to stay in a hotel, you meet someone who's a DJ, and you're like, wow, this person's going to make it, or this business is going to do well. But it's not easy to get a piece of it, right? So I was like, wow, tokens offer a really unique way for value to be distributed. Now, we saw 2017 with ICOs. We saw recently 2021 with NFTs. These are really cool. Like 2017, really cool because people could raise a lot of money, but it was all geeky, nerdy protocols. 2021, NFTs, it was cool because it made people realize that tokens aren't just for, geeks and protocols. It can be for real world stuff, for pictures, for, a lot of, restaurants, musicians made NFTs. But the key issue that both with ICOs and NFTs is they weren't backed by any real world underlying value. There wasn't enough products or services being offered. You could look at an NFT or you look at a coin and you go, okay, what am I really buying here? Is it a good time to buy it now? The price has dropped, 50%, maybe it's going to go back up, you make double your money. Or, if it's gone up, 30%, is it a good time because it's going to continue going up 30%? It's kind of like a crapshoot. It's kind of like the lottery is like the casino, let's see what happens, right? So that's just because of how early this industry is, and people haven't figured out a good way to price tokens or coins, or there's no framework or methodology. So what we basically came up with within the unit network is this idea that every single coin will have a lowest price. So if I had a Michael coin, you had a Paula coin, a Samuel coin, a Dana, Matty, Lona coin, like we all had personal coins, right? There'll be a lowest price for all of our coins. And how this lowest price is calculated is based on the amount of digital assets we put into our what's called the treasury, right? The treasury within unit is unique, compared to other projects that have treasuries, but our treasury is a little bit different. With the unit network treasury, if Samuel has just created the Samuel coin, the treasury is zero. If Michael just creates Michael coin, Paula just creates the Paula coin, the treasury is zero. Meaning if Dana or Christopher or Eddie or Emmanuel buys or Eric buys our coins, they know, okay, they could lose everything. It could drop from $1 to 50 cents to 20 to 10 down to zero. It's 100%, speculation. It's all risk. It's like not backed by anything. Now, if they buy some, Samuel coins, Michael coins, Paula coins, all of these, and we use this capital to create a product or service, generate value to society, whether it's food or a service, like, consulting, whatever, and we generate some revenue with that. We can use some of that revenue, the money that we get in, to put into our treasury, and it increases the lowest price of our token. So let's say the Michael token, we have 100 Michael tokens. At the beginning, there's zero, so it's the lowest price is zero. If you buy some Michael tokens, you can lose everything. However, if I put $200 into the Michael treasury, now the lowest price is $2. Meaning if you bought at $4, bought at $5, it can drop down to $2.50, $2.20, $2.10, but it's not going to drop below $2 because there's $200 in the treasury and there's 100 Michael tokens. So $200 divided by 100 Michael tokens is $2. And what this basically does, it's quite a simple but revolutionary thing, is it encourages every single coin to have a real business, a real product, a real service behind it, and be focused on building up its treasury. So one big flaw with our industry at the moment is a lot of projects and people are just focused on raising more money. They launch something, they look for investors, they get money in, and they spend all that money on marketing, and then they raise more money, and then they spend it on marketing, and they raise more money, and they just need to constantly, spend more money. If you see what happened with FTX, a month and a half ago, almost 2 months ago, that was an amazing business. It started 3 years ago. It was a well-run exchange. But the problem is it was just spending way too much money, and it was depending on new investors coming in. And, I was one of the first customers of FTX. I was living in Hong Kong in 2019, so about 3 years ago. And it used to be called Alameda OTC. So Sam used to, SPF used to handle customer support for me, and I was amazed. You know, it was a really good service they offered. But then what happened was, I think they focused too much on growing, and they were not focused on their downside risk. So it's great that you grow, you know, and your price of your coin goes up really high and your business grows, but you always need to be mindful that if things drop, it needs to be very clear what the lowest price of the downside risk is. So that's one thing really, really revolutionary with Unit. We also provide an exchange. So whenever you create a token, there's an exchange module built in. So, you know, if Paula or Lona or Darna or Samuel or Ganesh launches a token, then we can all see what the current trading price is. And how that works is you put in USDU and you put in the token into what's called a pool, and that allows you to see what the current price is. So I highly recommend playing around with the network. I'll post the link here, and I highly recommend everyone to just create a token. It doesn't cost anything. It takes it takes minutes to do, and or seconds to do really. And you'll be one of the first token builders in the world, one of the token makers. It's kind of like when the internet started and people are like, what is this internet thing? You know, like, is it a scam? Is it going to take off? You know, do people use it for anything? It's just for porn or for gambling. And then, you know, now the internet is such a paramount piece of society. You know, every single thing is on the internet. You no longer have internet businesses. You have, you know, businesses, and every business is on the internet, right? Whether it's got public presence, whether it's got a but selling online, booking online, you know, like almost everything has moved online. And you've got traditional businesses like bookshops even being displaced by internet businesses. So, you know, now we live in a world where there's a small number of people who control the money. You know, those are banks, those are the investment banks, those are the private equity firms, the venture capitalists, the angel investors. They are the gatekeepers, you know. They get to decide, okay, you're good enough, you're not good enough. I'm going to give you a shot. I'm not going to give you a shot. You know, you're friends with my friend. I went to the same school as you. You know, I grew up with you. I'm going to give you some money to support you. And this is very small in a minority society. You know, they're in big financial hubs. If you're in a small village in, you know, Indonesia, in Eastern Europe, in South America, in rural England, you know, you might not know these people in London, you know, or New York or Paris, you know, or Hong Kong, you know, Singapore, who hold all of the capital. And it's not fair that because you don't know these people, you don't have access to this economic opportunity. So, you know, the really cool thing about the token economy, the same way the internet provided access to information, the same way the mobile phone made it really easy to communicate, you know, tokens are going to do that to money. So now, you know, you don't stress about keeping in touch with people. You know, things like, you know, it's really amazing. Like this conversation, we're having it across the world, in different places around the world. We're talking to like a television. So you think 20 years ago, the televisions used to be this big, you know, like you said, to be this big, right? And now you've got a television, you know, either this small or this small, and you're talking to the television. Everyone else is talking. It's wild, like, you know. And this is 20 years, right? Same with the internet. You know, the internet. You know, before you want to learn about something, you needed to, you know, you read magazines or books. You know, go to a bookshop, talk to an expert. And now you just type something with the keyboard, and it just magically appears. All this information. So information solved the internet. Communication solved with, you know, mobile phone, things like, you know, Zoom and messaging apps. Money is still not solved. So a lot of people, you know, majority of people in the world, they stress out about money. You know, people who have lots and lots of money, they worry about losing it. People who are living paycheck to paycheck, they worry about paying their rent or surviving. You know, this is going to radically change, I would say, in the next 10 to 15 years. We're going to live in a society where, you know, if someone got offered 2 jobs, you know, one which paid this amount and one which paid 5 times this amount, it's not going to matter, you know, sacrificing your happiness to get paid a little bit more, because the monetary aspect is just not going to be so important. So it's kind of like, you know, there's just going to be so much more value in monetary money, you know, flowing around society. And you could say, hey, you know, wouldn't that lead to inflation? And, you know, I don't think it's going to lead to inflation, because the reason you have inflation is not because of simply an increase in demand, but a scarcity in supply. So what that means is, you know, if you've only got, you know, 5 bags of rice, you know, and everybody's got, let's say, 500 bags of rice, right? And everybody wants to buy the rice, you know, then the price of the rice is going to go really, really high, because, you know, inflation, there's a lot of demand, there's only 500 bags of rice. The price is going to go really high. So high price, high demand, low supply, 500. But you see, if you've got an unlimited amount of rice, you've just got more and more of it, then the price doesn't need to go up. If there's more demand, then there'll be more supply. Only if there's a cap on supply does the price go up. So, I'm super excited and bullish and positive about this industry. I think, crypto is going to continue to slide for the next 18 months. People think, it might drop for another 6 months and then shoot up. And then, all of this stuff was going to disappear. But I think what we're experiencing now is very similar to 2018 still. 2018, ICOs had imploded. People were thinking, okay, it might pick up again in late 2018. And then 2019, they thought it could pick up again. But 2019, it completely, for an entire year, it was, nothing really happened. So I think next year is going to be the year 2023 when nothing really happens. It's kind of like the consolidation, things get wiped out. Nobody talks about crypto tokens, a bunch of your friends who used to say, hey, what's new on this Web3 crypto stuff? They're going to be like, let's talk about something else. But then you'll see in 2024, we're going to start ramping up towards 2025, which is, I think, going to be the next huge wave in our industry. And the next huge wave, I think, is going to be tokenization for real world assets. So what that means is we're going to see coins being created, not for, pictures or for ideas, but for very real projects or people. So, all of us here will have coins by 2025. Those coins will be backed up by the products and services that we provide, which generates revenue, which back up our coins. Our, favorite businesses, projects, and brands are going to have coins. That means that, when they become more successful and they grow, we get some of the upside for it. So those are some points. Does anyone have any questions or thoughts so far? I hope didn't speak too fast, and I hope it was quite clear. Also worth mentioning, we are actively growing our team. So if anyone's interested in joining or supporting, please feel free to reach out. We're also building up our local ambassador network. We're launching a new master's batch, and we'll love to find a way to involve more people and support more people in this evolution. We try our best to get people opportunities, whether it's for jobs or for education or for speaking opportunities. So please feel free to reach out. I must say, real spectacular job by our unit team here. So please feel free to reach out to them. They've done incredible, and we could use all the help we can get. Does anyone have any other thoughts, feedback, or questions? Maybe we can talk about two other things, and then I think we can call it for today. Please, Paula, please, Ganesh.
Okay, can you hear me?
Hello.
Oops.
Yeah, hi.
Good question for you. So you were talking about in the next couple of years how this is going to play out. Do you feel that, especially when you're talking about the jobs, do you feel like in how the workforce is changing in terms of being remote, is this going to be in alignment with independent contractors where they have multiple jobs now based on what you were saying? Or do you feel like, it sounds like that's what it's going to be, but I'm just curious what your thoughts are.
Yeah, that's a great question. So, I think a little bit on the independent contractor side, where people are much more free, they're not bound to be employees, part of organizations. But one critical difference is people are going to have ownership. So if you think about something like Uber, when Uber went on the stock exchange, it was worth $80 billion, 80 billion. Like that's how much this app was worth, right? It had about 2 million drivers, all around the world, but none of these drivers had any of that 80 billion. They didn't get any of the ownership, right? All of the ownership went to Travis Kalanick and Garrett Camp, the founders, and the few venture capitalist funds that gave the money. So one big difference, I would say, is the ownership of things like Uber, Airbnb, Deliveroo won't just be held by the very small people, who started it and it gave them money, but it'll also be held by, let's say I was the first Uber driver, Paulo, you the first Uber customer. Without the two of us, Uber wouldn't be worth anything, right? If I stopped driving and I told my driver friends, guys, don't use this, it's a scam, it's not worth it, Uber will not be worth anything. But I didn't get any piece of that $80 billion, right? So one really interesting difference, I think, is the ownership of things will be much more distributed. And, if people are working multiple jobs with the gig economy, it can be quite stressful. People are thinking, oh my gosh, I've got to make this amount. I got to meet my quota here. If I don't, I could get kicked off the app. I think it's going to be much more liberating and free. I think a lot of jobs are going to be replaced by machines, and it's not going to be a bad thing. It's going to be a good thing, because when these machines create lots of value, the value won't just be distributed by a few people, but by more people. So if you think about a society, let's say in 15 years time, where all the drivers are done by robots, all the driving's done by robots, you think all of the food preparation is done by robots, all the people scan at the checkout are done by robots, all the people making clothes, not in sweatshops but done by robots. People are going to have much more time to do things they really want, right? And people can say, hey, what about me? I want to have a job, but people are going to spend their time doing more meaningful things, creating music, creating art, doing sport, reading, following their passion. And they won't simply work to get money. Like this idea of people just doing a job to get money, to pay their rent, to put food on the table, to support their kids is a bit demeaning. But this idea of Fuzzy Lawrence saying the creator economy, where people have much more opportunity to create things, to build, to make mistakes, to learn from them, is going to be much more prevalent. So I think a lot of people have quite negative dystopian view of the future, but I think it's actually going to be super positive. So the same way someone could have said with the internet, what's going to happen to all the librarians, people work in libraries, or the people who sell books, all the bookshops are going to go bust, or the people working in newspapers, right? What are they going to do? Or schools, how are schools going to make money when internet information is free? Or what's going to happen to the telecom companies when phones start providing information for free? So it sounds really tough looking forward. What's happening when everything is tokenized, when people's jobs get replaced. But I'm super positive. I think it's going to lead to much more opportunity, freedom, much less stress, much more happiness. So yeah, great question, Paulo. Yeah, thanks. Ganesh, you've got your hand up, please.
Thank you, Michael. I have a question related to tokenomics and decentralization. As we are talking about tokenization in Web3 economy, everyone is trying to come out with their own tokens, and even the networks also they are having their own tokens. And as you just said about price, supply, demand and supply of tokens, and anybody can go for rigging the manipulating their tokens, and we need to have some kind of controlling mechanism in order to avoid this kind of rigging in the economy. But my question would be like, can tokenomics really exist without the regulations?
Great question. So I think there will be some regulation, but I think in the coming decade, it's going to be self-regulated. So it's kind of like if you think if the government had to regulate every single website. So imagine you wanted to create a Zoom account, it was like a bank. You needed to apply for a Zoom account, you needed to get approved, it'd be kind of ridiculous. If you want to, create a blog, you need to send an application, and it's like, okay, will they approve my blog? You want to create a Twitter account or a Facebook account, it's like, okay, fill up this form, send it in, 2 weeks later, you get approved. This idea of being permissionless, I think is really exciting, but you need to assume that everyone is a scammer. So you have to assume that the default is, it's highly risky, it's a scam, it's a risk. Don't put money in, you can lose everything. But people will still put money in, and then if it builds up its credit worthiness, it has a real product, real business, real underlying value, then I think it will be seen as risky. And so I do think the Treasury system explained earlier is not just going to revolutionize our industry, but it's going to revolutionize the entire world. So there's about 12,000 coins and tokens that exist now. There's going to be 12 million coins and tokens, then there's going to be 12 billion coins and tokens. So I think people haven't seen and appreciate the perspective there. And also the idea of nation states, there's about 200 countries in the world. There's these imaginary lines and borders. You're born in a place, you get a book, that stamp tells you who you are. If someone's where you're from, where you're born says your identity. People make assumptions, whatever. I think all of this is going to radically change. I think the idea of nation states will be superseded by internet nation states. So I think people are going to be able to be much more fluid. If you want to be part of the Tokyo or Seoul or Milan, London, New York token economy, you can do that. You don't need to be born to someone from there, or have lots of money to get a passport from there. It's just going to be much more liberating and free. And we're going to look back at this current system of these books defining people's identity, where they can go to, what bank accounts they can open, things like that, as a little bit ridiculous. Interesting point from Marie. That was the hope and expectation of the internet, more free time to just be, but it's quite the opposite. And with the flexibility to work anywhere, anytime in the world, I'm holding on to the vision that Web3 will be different and foster true life balance as well as economic equity. Yeah, this is a great point, Marie. I mean, I think the internet has had some positives, but also lots of negatives. I think there's many problems in the world. You look at poverty, you look at food, you look at water issues, you look at gender inequity, racial inequity, you look at magnitude of problems. And I think a lot of these problems boil down to economic reasons. Economic reasons. So if you solve the economic reasons, it just becomes a lot easier to solve all of these problems. Like a lot of people say, I would eat healthier if I could afford it, but a lot of people, it's very expensive to eat healthy. A lot of people, would work out if, they didn't have to work two jobs. A lot of people would pursue, a socially impactful mission, if they could afford it, but it's generally really, really challenging. Same with philanthropy. A lot of people want to be philanthropists and doing good stuff, but the issue is that it needs an economic return. So someone builds a library, that needs to have an economic return. Someone builds a school, needs to be at least a way for what the money they use, the value they use to create that school, to generate a return to build more schools. So I think tokens offer a really cool mechanism to solve it. Hope that answers your question, Ganesh, and great point. Over to you, Fabian, please. Thank you.
Hello. Hi.
Hey, Fabian.
I had like 3 questions. One, you mentioned something about using tokens would allow workers in future to be able to, like if they had 2 job options, they wouldn't be affected by taking a lower choice of this. I wanted maybe if you can just explain that because I didn't get it. The second question would be in terms of when you create the token, the money that's put into it is what gives it its initial value. Then as you're making profits, you add your profits into and that's what increases its value. And the third question would be, I have a situation, for example, I'm based in Kenya. Now, under Kenyan government regulations, as a startup, you're not allowed to receive deposits. So if I wanted to create like an investment platform for people to be able to invest in, let's say, community projects so that neighborhoods can build playgrounds or tennis courts, which is sort of lacking across most Kenyan neighborhoods, how would you be able to do that within tokens? Or this still means that you have to have some sort of regulations to be able to function?
Cool. These are great points and questions. So the first one, so if someone's got 2 jobs, now someone's got 2 job offers, let's say one was paying, $50,000 a year, which is a lot of money, and one was paying $250,000 a year. They'll be like, I'm going to sacrifice my happiness, even though I like the one that's paying me $50,000 a year. I'm going to go for $250,000 a year. Or let's say someone has, $10,000 as a job offer a year or $50,000 a year. They'll say, you know what? I prefer the mission, the vision, the team, the one paying me 10,000, but I'll take the one paying me 50,000, 5 times as much, simply because it's paying me more. And I can't afford to to give up this 40,000 extra a year, right? What I'm saying is that when this token economy comes to its fruition, where there's tokens for everything, everyone is, in a stakeholder, have a tokens of everything. People are not going to make money from simply getting a job. A job is going to be more like a nice to have. It's going to be like an additional way of generating revenue, right? So that's why, given two job opportunities, people are not necessarily going to choose the one that pays more. If they to take a holiday, between this location, the money piece is not going to be as relevant. So it's kind of like, when the internet started, if a video which was 20 seconds long loaded in 1 minute or 5 minutes, it makes a big difference, right? It's like, okay, the video is 20 seconds. I have to wait a minute, which is really long, 3 times as much as my video. You're telling me I have to wait 5 minutes, which is 15 times as long. It's a big difference. The extra 4 minutes makes a big difference. But if I'm telling you it loads, in 1/5 of a second, or 3/5 of a second, or 1 second versus 3 seconds, it really doesn't make much of a difference. So what I'm saying is that, this token economy is going to make the rich richer. Someone who's a multi-billionaire, like Mark Zuckerberg, Elon Musk, Jeff Bezos, all of these people, they're going to become trillionaires. The rich are going to get way richer because things are going to be more valuable. The token economy is going to generate a lot of more revenue, a lot more higher prices, like much more valuable projects. But then most of society, who's either in debt or living paycheck to paycheck, they're going to be, having a few $100,000 or a few $1 million, and then they're not going to have to worry about, paying their rent or surviving. They're just going to be much more well taken care of. So if you think, instead of the gap, which is like this now, it's like rich, everyone else, instead of it, being like that, where the rich get less and everyone else, the poor, gets up. So it goes like that. I'm saying, instead of it, it goes like that, where the gap is now bigger, but the ratio, so it's bigger on an absolute level, but small on a relative level. So, from, let's say, majority of people in society being in debt or having nothing, and then you got the multi-billionaires who have 200 billion, right? The gap is 200 billion. I'm saying that it's going to move to where, these, very well-off founders, instead of them having a few 100 billion, they're going to have maybe 15 trillion, which sounds kind of crazy. But then the average person is going to have maybe $2 or $3 million. So now the gap is almost 14 trillion, 999 billion. It's crazy big, but at least everybody else is taken care of. So it's a win-win. The rich don't need to be giving up their value to everyone else, and everyone else, gets a piece of the pie. So if you think about the Uber analogy, the founders of Uber, made $80 billion from, Uber being, very successful. None of this went to the drivers. There's $80 billion, 2 million drivers. That's about $40,000 a driver. None of that $40,000 went to any of the drivers. And if you're the first driver, you probably should get more than if you're the driver who just joined last week, right? Should like a little bit more balanced. In this new model, Uber will, instead of being worth 80 billion, it'll be worth maybe 500 billion. They have a lot more loyal customers, a lot more loyal drivers. They'll be able to charge more, it'll be more revenue, more profitable. But instead of this 500 billion just being shared by, the small group of people who started it and invested in it, all of the drivers will get a piece of it. So that's kind of the thought process behind it. They won't just be making money from, driving Uber, but they'll be, owning a piece of Uber, which is valuable in itself. And then the final point was, based in Kenya, the regulations and receiving deposits. So I highly recommend launching tokens. I highly recommend launching I highly recommend launching tokens within your local community and ecosystem. And we'll love to support with our community and on the fundraising side, how we can launch these case studies. I highly recommend starting off with small projects, getting successful with the case studies, and then building it and scaling it up there. And then over time, you'll notice that these case studies will grow and people will follow and copy suit. So I hope that answers your question, and love to see how we can build up some case studies. We actually have a Nairobi token in Kenya, and we'll be participating in the Dot Safari event middle of next year. So love to see how we can team up there and it can coordinate. Please, Mati. And then maybe we can wrap up soon because maybe 45 minutes past. But please, Mati.
Hi, I'm still confused. Are you saying that the token system is it? I'm perceiving like it's going to be more like a bartering system or something, meaning that whatever you have to offer to back up that token that you're creating, that is what's going to create that value of your token, meaning no matter what it is, whether it's like I sing. So you meaning like the books that I write or the music that I create, are you saying that can be used as to back up the tokens? Or I'm not quite sure, and I'm still kind of trying to understand the question that Fabian had just asked in terms of, I'm still not seeing how is it going to increase
How it's going to revolutionize
my personal wealth.
Yeah. So let me touch. So how it relates to books is, let's say you become the next J.K. Rowling. You release a book like Harry Potter, and you've got millions and billions of people loving your book. A movie gets created, a theme park gets created. We all buy Harry Potter shirts, and you make billions of dollars because you're the next J.K. Rowling, right? But let's say all of us here, we were your first fans. We read the first edition. We told our friends, to read your book. We gave you some ideas about the characters. We told you, the introduction of Harry Potter just wasn't exciting enough. You need to have this idea. Or, you're having coffee with someone here and, who told you, forget about, Hagrid, use another character or something like this. All of these things that help you become the next J.K. Rowling, are important, right? But there isn't an easy way for you to distribute this value. It kind of like shares. When you create a company, you got shares and you usually sell those shares. Tokens are just like shares. So if you think you launch a book, your career, when we help you, all of us here on the call, you can give us a small amount of shares, or we can chip in, a small amount of money, or let's say we don't have money, we just do some work. Let's say I can help on the marketing of your book. Someone else here can help you on the printing of the book. Someone else can help you expand in Asia. Someone else can help you expand in South America, in the US, in Europe. Like, we're all working together to make you successful. Now, when you become successful, because you've built your book in the form of a token, that means that it's not just you who benefits, but all of us who own a piece of the token. So you can think of tokens as less like barter, like one token represents one book, but your tokens represent your book career. So you create 100 tokens, or let's say 100,000 tokens, you hold all of them to begin with, and then let's say me and all of us here can chip in $10 each, and we get 10 tokens each. Now we've got a very small piece of your future, book writing career. It means that when you succeed, we're not going to be jealous and like, oh, she's successful, I haven't made it yet. I hope, she fails and then I succeed, right? It's going to be like, I hope she continues to succeed, because I've got a very small piece of it, and I can show my friends that, I've got that, small piece of it. So if you think about something like Bitcoin, Bitcoin versus PayPal. So, if you're one of the first users of PayPal, you could tell people how buggy it was, or, and the nice story of, these guys, living in a garage, who kind of got lucky maybe, right? But you didn't get any of the upside, right? But if you were one of the first users of Bitcoin, the Bitcoins were basically shares, of using Bitcoin, right? You could have bought Bitcoin for 10 cents, 50 cents, $1, $2, $5, and you got a piece of it. So now when Bitcoin's grown, to $15,000, to $60,000 last year, you would have a piece of the shares of Bitcoin. So you can think of tokens kind of like shares. I'm pretty confident that, Bitcoin will continue to crash, for the next 6 months, a year, but then it's going to continue to grow. And, I think Bitcoin will get to 1 million, then to 10 million, then to $100 million per Bitcoin. And I think why it's going to get so big is because every single business or person or project is going to hold a small amount of Bitcoin. So let's say, Matthew, with your book writing career, at the beginning, you just created your coin for your new book, or you as a writer, you're going to have 0 Bitcoin backing up your book, or you as a person, right? But then when you sell books, you could sell them in dollars, euros, francs, pounds, whatever currency, you're going to convert that, money into Bitcoin, and you're going to put that Bitcoin into your tokens treasury. And that's what we're going to be able to tell if your book is doing well. Now, if let's say you sold a bunch of books and you kept the money, you didn't put it into your treasury, you didn't convert it to crypto, didn't convert it to Bitcoin, put it into your treasury, we're going to be like, maybe she's not doing so well. I mean, it looks like she's selling a lot of books, but we don't see any growth in the treasury. So the treasury, like tokens, are a way of keeping people accountable. It's a way of managing the transparency of it. It's a way of, all of us be able to chip in a small amount. Like if we had to do it with bank transfers, it would be a complete nightmare. You would receive 100 bank transfers and you'll probably go crazy. If someone wanted to give you $25, you'll be like, please, my bank is going to charge me $40 in fees. I don't want $25. If you want to invest $10,000, that's good. My bank would be okay with that. But if it's $25, $100, $200, it's too small. But the cool thing about tokens is there's no such thing as too small. If someone to put in $7, they can put in $7 and they've got a piece of your future career. If someone says, I've got no money, can I just have two of your tokens, just so I have a piece of it? You'll be like, sure, just tell 3 of your friends to buy a book and then you'll get 3 tokens. Like you can create all sorts of mechanisms like that. So where we sit with the Unit Network is we provide a really easy way for people to create coins and tokens. We want to be, the leader of the industry in creating coins and tokens. And we've also been quite liberal about how we've been building it. So we haven't spent a crazy amount of money. We've got a team of 40 people. We've raised about $13 million. We're continuing to grow. We're looking for, to build our team. So, if anyone has any interest in joining our ambassador program, please feel free to reach out. Or please continue to share and spread the study groups and the Unit Masters program. We think the education piece is such an important and critical aspect. But I'd love to learn more about your book, Matty, and please feel free to apply to our Ventures program. So our Ventures program starts in 2 weeks, I think. It's completely free. It's basically when people graduate the Masters program, they take the Ventures program, and that helps them create a token, either to raise money or, if you have a project or business already, it helps you can sell parts of it in the form of a token. So those are a few key points. Rahul, do you have a question? Yeah, no, thank you, Matty. I guess we can wrap up because we're 45 minutes over.
Yeah, hi. Quickly. So,
Please.
Michael, so when we talk about overall macroeconomics as such, right, there is always, currently there is recession, war going on, and government's printing money, right? We already have so much of money in the economy floating around probably, right? When crypto comes in and Bitcoin has come in and a lot of crypto coming in, we are developing cryptos, 15,000 kind of cryptos are there all over the world, right? Probably at this point of a time. Is this token economy and crypto economy not adding to more liquidity in the market and more inflation? That's my question. Along with the money system, which we already have, plus the token economic system. Yeah.
Yep, great point, Rahul. So when you create new tokens and coins, does it create more money? And if you have more money, that leads to inflation and more spending, and prices go more expensive, right? Is that right? Yep.
Yes.
So the important thing is you have more goods that get created. You've got more real value. So there's a difference between creating speculative value and real value. So speculative value is like let's say I've got this hairband. I could say that this is worth $100 million, right? That's speculative value, right? There's no underlying value behind it, right? But if someone's got a business which is generating 100 million hairbands, and people are buying these hairbands and they're appreciating it, right? That's got real value because it's got people buying it, it's got products, it's got services, it's got economic value. So we don't want to have more money, we don't need more money in itself. What we need is more goods to be produced, we need more service to be offered, we need more opportunities for people, we need better distribution. Like there is really more than enough money in the world at the moment. Like if you look at the amount of wealth, you go to big cities and you look at these skyscrapers, all the biggest banks, have all these big skyscrapers. You look at, countries with lots of oil, there's like crazy amount of value, resources, wealth in the world. But the key issue is it's just not very well distributed. You've got funds like SoftBank with 100 billion, you've got, BlackRock, Blackstone, worth trillions of dollars. And there's just not an easy way for this value to flow to the right places. and it's not going to flow to the right places, which is going to lose the money. It's only going to go to projects and people, which is going to, be sustainable and generate a return. And it needs, maybe 4% returns, 10% returns. Basically, that means is if these big groups invest in something, they need, the $100 be worth $110 next year, to have $120 the next year, $130 the next year. They need, and in 10 years to basically cover what they put in, right? 10 years to break even, 10% a year. And tokens allow for that to happen. So you can think of tokens as really no different from shares. They're kind of like digital shares. So you can think about Internet's really no different from books. It's just a digital way of, sharing information, distributing it. And the Internet's, kind of digital version of books. You can think about, the smartphone is a digital version of your Nokia, your cell phone before. You can think of tokens as a digital version of shares and stocks. Now if you look at the New York Stock Exchange, you look at the Frankfurt Stock Exchange, there's a few thousand companies there, right? But if you think of the whole world, there's millions and hundreds of millions and billions of businesses, right? What we're saying is that tokens are going to provide a way for all of these, billions of businesses around the world to receive much more capital, to be distributing its value. Like, for instance, Rahul, let's say you've got an idea for a business. It's not easy for all of us here to support you in your business. And when you become really successful, it's not really straightforward and easy for us to get some of that upside. Yeah. So that's kind of it.
I got it. Thank you so much.
Cool. No. And, please feel free to reach out whenever, and excited for us to team up and clever. Maybe final question from Abu Bakar. What is FTX? What is FTX is supposed to focus on about their business instead of marketing? So I think the issue with the FTX is they were just a bit inexperienced. So it was their first business and they hadn't failed before. So they kind of thought they were invincible. They never experienced a bear market in crypto. So they didn't realize how it can, it can be worth so much and then drop so much so quickly. So I think they got kind of a bit greedy, a bit overconfident. I went to the FTX conference in the Bahamas earlier this year in April, and I was thinking, how are they able to spend all of this money? Where is it coming from? And I've done lots and lots of trading on FTX, but I've never left money on the exchange. What I think is going to come out from this, a few things. One is people are going to hold on to their crypto. They're going to use something like a ledger, one of these. It's like a memory stick for holding crypto, or they're going to keep up, on their phone. I would recommend a ledger. This is called a cold wallet. Then you have custody of your own coins instead of leaving. So people are going to leave coins not on an exchange like Binance or Coinbase, but they're going to hold it themselves. That's one difference. Another difference is people are going to companies are going to be much more transparent and accountable. So, everyone kind of trusted FTX to be the leader. They're big in government. They work with all these big guys. You can trust them. But, the thing is, two things. One, Google's motto was "Don't be evil," right? So when they made a decision, they were thinking, okay, should I do this? No, it's evil. I'm not going to do it. Right? It's going to move to can't be evil. So it's like we don't have to trust that Google is not going to be evil. It's just not going to be possible for them to be evil. It's like their code is public, transparent, open source. So they can't lie, they can't cheat. That's the first thing. And then the second thing is there's just going to be much less need for trust. The other thing too is I think people are going to be much more aware of the difference between speculative value and underlying value. So I think those are a few key points. Matty, can you please give us the information about the ventures program? Thank you, Michael. Yeah, most definitely. Maybe Anchor can post it, or Alessandros can post it on the study room chat. Love to learn more about the various projects people have in our master's program. We've got some amazing people like Anne, Roland, and Adrian leading that. Maybe final question for Coco, just being mindful of people's time. As a protocol focused on tokens, will you advise Web3 startups to be speculative value right off the bat in order to raise investor funds by selling tokens, or these tokens can just grow according to the growth of the value start? That's a great question. So I would recommend raising as little money as possible. and then not spending the money. So a lot of people think when you raise money, you need to spend it, because the whole point, you raise the money to spend it, right? So I think, companies, projects should raise a small amount of money, even, maybe not raise money. And when they do, if they raise a small amount of money, then yeah, just focus on having a product, a very clear product or service that people understand, and generate profit from day one, because that's going to make it much more easy to raise money, and it's going to be much more strong as a business. If you, like a lot of people say, like, don't focus on profitability, focus on revenue, just get selling more and don't focus on generating profit with each product. But I actually think it's really important that the what's called unit economics are done right. So like, like every single product or service you sell, you generate some amount of profit, and then that way, when you get more and more clients, it grows accordingly. Yogoshi Stacey said speculative value, and what other value? Underlying value, I think that. So you got speculative value, which is like, pretend value. It's like, we're speculating that, all of the profits in the future are going to be really high, so we speculatively believe it's really high. The underlying value is, the amount of cash or, Bitcoin or crypto that something has accrued already. Abu Bakr, apart from greed, since no institution to check the activities made, the FTX CEO to go across the board without knowing. Yeah, I mean, that's the whole problem, right? So a lot of people trusted these institutions and thought, because these big guys were, supporting and investing in, FTX, people kind of trusted. And what we're saying is that we're going to move to a society where you don't need to trust, you can actually verify. Same with Binance. Binance, people think, oh wow, they've got all of this money, you can trust them, they're really big, but you shouldn't have to trust. You should be able to see, okay, I need to know exactly how well they're doing. I need to know that the funds that I deposited, they're actually there. They're not pretending to be there. It's like an IOU. So I mean, the one cool thing is, if you have Bitcoin on a ledger, LEDGR, or you've got Bitcoin on your phone, let's say Exodus, the Bitcoin is actually there. It's not like an IOU. Like if you've got Bitcoin on, Binance, it's an IOU. It's like Bitcoin is whole. Bitcoin, Binance says that when you withdraw, there will be a Bitcoin there, but you don't know, do they have a lot more liabilities than assets on hand? Do they owe a lot more people Bitcoin than the Bitcoin they actually hold? Right? And you shouldn't have to, trust. You should be able to verify. And one thing worth mentioning too is, a lot of the stuff I mentioned might have been way too much. Like, oh my gosh, all of these words, I don't understand them, or it's too quick, too fast. The way I like to think about it is, every single time you attend a speaker session, or you come read something, you're going to learn a little bit more. And then in a few weeks, in a few months, in a year, you'll be looking back and go, wow, all of this is so easy. So you kind of have to think that you're kind of walking in a room which is really dark. You go in a bright room like this, and you can't see anything. But then the longer you spend there, your eyes adjust, and it's like, cool, you can start seeing things, right? So that's kind of like how I think the crypto blockchain technology sphere is. A lot of it is so new. A lot of people who claim to be experts, they don't, I would say, really know what they're doing. A lot of stuff is really being innovated. I've been fortunate to meet a lot of the leaders in the industry, and I can say that a lot of them sometimes just regurgitate what other people say. So they don't think on first principles. They don't actually question what they're saying. They just listen to someone else that they read, and they just repeat it. And if you ask them why they say something a certain way, they'll repeat what they heard, but they don't actually understand what they're saying. Another thing is, if people can't explain something in this really simple way, then they don't really understand it themselves. So if people use really big jargon, or use complex words, zero knowledge proof, ZK snarks, and then you've got DAGs, or like really complex tech words, then maybe they don't understand it themselves, and they're just doing it, mentioning these big words so that you don't question. You should really get involved in something if you really understand it. Like, as an example, I met the CEO of Celsius earlier this year. I invested in their round, a few years ago, and I caught up with the CEO earlier this year, and he wanted me to put, my money onto the platform, because they basically offered returns from leaving crypto with them. And I said, Alex, let's say if I leave some money there, like, how do I know for sure I'm going to get it back? And he says, Michael, I've put all my money there. I've got all of these big guys behind it. And I'm like, okay, sure. But, what is the proof? Like, where are these returns coming from? And for me, I just didn't understand it. And because I didn't understand it, I didn't end up doing it. And, as a result, it went bankrupt this year. And, thankfully, I didn't lose anything. So very important, I would say, when people, tell you about projects or, concepts in the crypto blockchain sphere, try and get them to understand, explain it in a really simple way. And, if you don't understand it, if it sounds really smart and you have to trust the person, maybe buy a very small amount, like really small amount, something that you spend for lunch, or it's like really small. And then if you understand it, having supported with a really small amount, then you put a bit more. But it needs to be very clear where the profit or revenue is coming from, and it should be very simple. Like if you buy a phone, like Apple, it's very clear that if you invest in Apple, the amount that they make producing the phone, in these sweatshops in China, unfortunately at the moment, is less than what they sell the iPhone for. So that's what their profit is, right? Or if you buy a watch, or you buy a computer, whatever, it's very clear what their business is. But other things, if it's not clear what the underlying value is, then I would be very skeptical, just because it might be simply depending on new investors coming in, and then the underlying value is a bit broken. But yeah, really appreciate the time here. Thank you so much for everyone. The great questions, and really appreciate the support for the Unimasters program. And yeah, love to find a way to synergize and team up with everyone here. Thank you.